I hope you all have had a great weekend. We have some interesting things to talk about today. We'll be starting with Bitcoin and the effects of BRC20 tokens and Ordinals on the network. We'll discuss last week's FOMC meeting. Then we'll get into the Memecoin mania of Pepe token before looking at the SEC's record-breaking whistleblower news. I'm Taron. This is Last Week in Crypto, and let's just dive right in. Bitcoin's price slipped about 7.5% over the weekend, sliding to a cool $27,500 at the time of filming. And the rest of the crypto markets also feeling the heat. What is the reason? Well, one explanation has been network congestion and crazy high fees. BRC20 tokens and Bitcoin Ordinals have clogged the network. This has also led Binance to put a pause on Bitcoin withdrawals, which is concerning for reasons that are outside the scope of this segment. But let's just say that anything that makes the Bitcoin network congested and undesirable to use is not good. Some are shouting DDoS attack, but it is a difficult one to prove. The bullish outlook for Bitcoin's long-term prospect is still intact though, and all of this in spite of higher volatility due to liquidity from Operation Choke Point 2.0. Needless to say, we'll probably be in for a bit of a rollercoaster ride over the coming weeks and months. I think that Binance's temporary halt of Bitcoin withdrawals only exacerbates market anxiety. Bitcoin's market struggles highlight the critical need to address network scalability issues. While BRC20 tokens and Bitcoin Ordinals contribute to network usage, they also expose Bitcoin's limitations in handling increased demand. Remember that Bitcoin's not a smart contract network, and despite Bitcoin's bullish long-term outlook, it's crucial to find sustainable solutions to network challenges, perhaps in the form of layer 2s. And if it does turn out to be a DDoS attack, well, that's not a good look for the king of the blockchains. I really hope this isn't the case. I'm interested to see where this new token standard and potential for innovation leads. BRC20 is definitely one to keep an eye on. And then last week saw the third FOMC meeting of the year. The committee's official statement announced an increase in the target range for the federal funds rate from 5% to 5.25%. And in response to this announcement, the stock market and the crypto market displayed differing reactions. The stock market took a nosedive, while Bitcoin and Ethereum came out swinging. Bitcoin whale activity has been unpredictable, with significant surges and swift declines. Nevertheless, accumulation by large investors is considered by many a clear indication of their belief in the potential of these assets for long-term growth. The recent FOMC announcement has undoubtedly impacted both the crypto and stock market, though the exact extent of the effects remains uncertain at this point. It is essential to maintain a critical and cautious stance when evaluating the crypto market, especially as increased uncertainty stemming from fears of more US bank failures looms. The market's unpredictable nature, highlighted by Bitcoin's whale's erratic behavior and previously mentioned network congestion, raises concerns over the stability and short-term viability of cryptocurrencies as investment options. The FOMC's interest rate hike decision and concerns over potential bank failures intensify the uncertainty in an already volatile landscape. It is vital to maintain investor vigilance and resist the temptation to get swept up in the hype, which actually leads on nicely into today's next segment. Imagine investing a cool $3 million in Pepe tokens, only to witness a sudden 42% drop in token price a few days later, causing a substantial part of your investment to vanish into thin air. Unfortunately, that's precisely what happened to one Memecoin whale who chose to take a chance on Pepe. They're now swimming in a sea of red with an unrealized loss of $600,000 or more at this point. Pepe's price might have taken a nosedive, but it's still managing to boast a market cap of close to around $1 billion. This occurrence highlights the speculative nature of the meme coins and the potential hazards associated with trading them. Meme coins like Pepe might be making waves right now, but remember, they're about as predictable as a roulette wheel. The meme coin market is inherently unpredictable and irrational. Investors are often enticed by flashy gains and overlook the lack of fundamentals, making these tokens highly vulnerable to significant price fluctuations. The hype surrounding meme coins also tends to distract from the genuine potential of blockchain technology and diverts attention from more robust, utility-driven projects. In essence, the meme coin craze promotes irresponsible investing behavior and, in a way, undermines the credibility of the entire crypto ecosystem. And look, I won't judge anyone for their investment decisions. I just want to urge you to invest with caution, because when it comes to meme coins, the stakes are high, but in all honesty, the risks are higher. And it just wouldn't be right if I didn't include some SEC-related news. So on that note, SEC just dished out an enormous $279 million to a whistleblower. Yes, that's the largest payout in the history of their whistleblower program. So if you've got the inside scoop on some shady dealings, you might just hit the jackpot, as eligible whistleblowers can receive 10 to 30% of monetary sanctions collected. This program, which started in 2010, was established under the Dodd-Frank Act and has helped recover over $4 billion in ill-gotten gains. To be eligible, however, whistleblowers must provide original, credible, and timely information on federal securities law violations. And potential whistleblowers shouldn't worry about their safety, as the SEC will keep their identity on the down low and protect them from retaliation. This sizable reward raises concerns about the potential for perverse incentives. While the program has succeeded in recovering billions, such large monetary rewards can significantly increase false or misleading claims. Still, I'm sure it's nothing the SEC can't handle. And which investigation this reward is related to is anyone's best guess. Could be crypto-related. They have recently served Coinbase and Paxos with Wells notices, and there is an ongoing case with Ripple, but I'm not so sure about it relating to any of these. Could also have something to do with their investigation into the conduct of First Republic Bank executives prior to its government seizure and sale to JP Morgan Chase & Co. They are looking into whether any members of the executive team improperly traded on insider information. There are no accusations of misbehavior against any bank employees, past or present. The investigation may end without any findings of misconduct. I really don't know, and if I made any definitive claims either way, they would be purely speculative. But if you know, maybe let us all know in the comments, or about any of the stories I've covered today. I'm always interested to hear what you have to say. And now at that time of the video, if you enjoyed it, I would very much appreciate it if you hit that thumbs up button. It helps me out and allows me to grow my channel and be seen by a larger audience. You can find some links to my socials in the description below, as well as some referrals that will definitely benefit me, but might benefit you too. There's always a lot happening in the world of crypto, and if you want to stay updated on the developments and join the conversation, make sure to hit that subscribe button and turn on notifications. Thank you so much for joining me today. I hope you have an awesome week. This was Last Week in Crypto, and I'll see you in the next one.